The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organization mentioned in this podcast.
Okay, Thursday, 28th of November. Jeremy, good to have you back again. How was your week?
Hi, Gareth. Yeah, pretty good.
It's been a quiet one with the US relatively closed for Thanksgiving, but interested to hear what you've been seeing and what you think we should be thinking about this week.
Well, yeah, it's Thanksgiving holiday today, so the US investors can take a bit of a breather and take stock. I suspect the election and the sustainability of the Trump trade might be discussed over the Thanksgiving dinner table today. And maybe they will largely be giving thanks for breaking away from us colonial imperialists from nearly 250 years ago. Just imagine if they hadn't, they thought Kamala Harris was not up to the job. I wonder what they'd make of Keir Starmer and Rachel Reeves. But
that's true. Yeah, I'm sure they're counting their blessings in many ways. So, yeah.
But they've got Trump, and Trump's obviously ensconced in Mar-a-Lago doing his nominations. And, you know, it's taking shape. We now know who his nomination is for the Treasury Secretary, Scott Bessant. Markets have taken this positively because bond yields have fallen. And I think crucially, we have someone now who is capable of protecting the relative independence of the Federal Reserve. So I suspect Jay Powell will be somewhat relieved that he got the person he got. He's a person with a very strong macro investor track record and pedigree. I mean, this is not a Minister of Finance who will need to embellish his CV.
Unlike others who potentially have. That's true. Although you need to be a strong character if your main job is standing between Donald Trump and Jay Powell. So, yeah, you want to be able to stand up to scrutiny.
But this is a guy who's very well respected as a market professional. He's worked alongside the best. You know, Jim Rogers, George Soros, Stan Druckenmiller, they all speak highly of him. And he has made a lot of money for himself and his investors over a long period of time. So I think that is an important milestone for the monetary and fiscal policy aspects of the Trump administration.
Good. So credible pick there in the Treasury Secretary. Okay.
Yeah, and I think probably the way to interpret this is that actually managing the Fed and managing bond markets and fiscal policy is not Trump's main wheelhouse. He is much more focused on who's going to be his man doing the job for him in areas like tackling the Department of Justice, the regulatory oversight departments and such like. So, you know, I think this is slightly arm's length for Trump. And I think also what's becoming apparent in the last couple of days now is Trump's ambition to use tariffs as a negotiating tactic. This morning, we've had ECB head Christine Lagarde saying that Europe needs to negotiate, not retaliate. And I think that's significant because she and others will be mindful that Europe, at the heart of which is currently being deindustrialized by an uncompetitive energy policy, is the only loser in a trade war with the United States. So this is all part and parcel, I think, of what Trump is trying to do, which is essentially to renegotiate the world. As a subsidiary point to making America great again, he needs to get Europe off the handouts, as he would see it, from the US economy, and he needs to improve the terms of trade the US has with the rest of the world. And how successful he will be, we'll have to wait and see. But I think this is the sort of shape of the things to come.
So as well as shaking up the US, that's going to sort of indirectly shake up and create quite a lot of change for the rest of us as well. And some of that might be good.
Yes, he and the people he has around him have a particular worldview. That means that he will look favorably upon other nations that do the sort of things that he is doing. So in terms of energy policy, government borrowing, the strategic importance of the dollar, all those things are going to be viewed by Trump and his team as things to encourage among Western nations. And some of those will fall into line quite quickly and others will find it more difficult. But I think that's what's taking shape, yeah.
No, it's interesting. We talked last week about the similarities with Argentina, and Argentina's a dramatically more difficult and more challenged starting point. And Milei and his activities there and his very aggressive cost cutting and reshaping of the Argentine federal government, or the way that they operate, has been hugely dramatic. And you could say the US is starting from a less obviously bad starting point, but they've got many similar challenges, and it'd be interesting to see how the Doge brothers, or whatever they're going to be called, take it forward.
That's going to be really interesting. And I think one has to be careful what one hopes for in this department, because if Musk and Vivek do their job too well in the next 18 months, and they've given themselves 18 months to hack back what they see as government inefficiency, it could become deflationary and destabilizing, not just to the economy, but to financial markets. I think the prospect of that happening are probably quite limited, because unlike Milei in Argentina, there will be a fight back from whatever you want to call it, the blob, the deep state.
Swamp, yeah.
They're not going to lie down and just let it happen, and they remain a powerful political force. It represents a very large part of the US economy, the federal and state and local government. So it's a much bigger challenge than just an 18-month project for two sort of part-time billionaires.
Well, he's kicked it off, and if they can manage to trim the federal budget just enough to keep the economy stable and keep faith in the dollar, but not so much that they destabilize things, then that would be an achievement indeed. So, yeah.
Yeah. One of the other impacts that Trump has had already is the price move since his election victory, a very strong price recovery in US natural gas prices. And this sounds slightly counterintuitive, but the reason US natural gas prices are so low is that a great deal of natural gas that is produced in these hugely prolific shale fields in the US are basically trapped. There are no pipelines. You can get the oil out, you can't get the gas out. So this gas is either being burnt off or given away. Now, one of the things that Trump has pledged to change is the opening up of more pipelines and more export facilities in the Gulf. And this will unlock that trapped gas. And this will also be good news for Europe and the rest of the world, because it will bridge this arbitrage, this huge discrepancy of natural gas prices between the two continents. So while there will remain a premium in Europe, there is evidence that this might start to reduce. And a benefit to Europe could come quite quickly in the form of lower gas prices.
So prices have risen in the States because there's the prospect of being able to export it, where currently that's not the case.
Because they can now access European and world prices in the form of LNG.
Okay. What else have you been looking at? Anything else generally before we think about the UK market? Anything?
Well, out in the Far East, Bloomberg reported that shares in Japanese semiconductor companies jumped amid a report that the US is considering lighter than expected restrictions on chip equipment and AI memory semiconductors for China. That's interesting from two reasons. One, semiconductors are very important, the probably most important sort of strategically consequential industry there is. I think it also just could be indicative that the Trump we get this time, rather than Trump we had last time, I think might be more prepared to do deals even with Xi. And I suspect if there is a big surprise in the next 12 months, it could be that Trump will declare that he's best of mates with Xi and he gets on famously with him and he does everything he wants him to do. So, let's wait and see. And elsewhere in Asia, people should be aware that this yen carry trade unwind is lurking beneath the surface still. If you recall, back in the summer, the spiking of Japanese yen on the back of a surprise increase in Bank of Japan interest rates really unsettled financial markets materially, admittedly just for a very few days. But since that huge spike, the yen has gradually weakened from around 140 to the dollar to 157. Over the last 10 days or so, that has reversed quite sharply. The yen is now in the low 150s, and there are increasing noises coming from Tokyo that the Bank of Japan is wanting to raise rates again. Whether they're letting the right people know at the right time so things can be adjusted and it will make it a lot smoother We'll have to wait and see. But what is emerging is quite an imbalance here between what is going on in Japan and what is going on in China. China is easing quite aggressively, but with Tokyo tightening further, this can lead to imbalances and risks that one has to be aware of, I think.
When the carry trade suddenly became famous over the summer, it was quite scary quite quickly. So yeah, we'll keep an eye on that and make sure we're not surprised by it again, hopefully.
So what about you? What have you been looking at this week? What's been going on in the world of UK smaller companies?
So yeah, the UK small cap space has been pretty busy with news flow this week, and we had 4 progressive clients reporting various different bits and pieces of news. So we had iDocs, which provides software into the local government sector and various other markets. They had an inline trading update for the year to October and some pretty good order growth. So they're seeing steady ongoing improvement in their markets and a good delivery from iDocs in terms of their trading update. We had some tricky news from Severfield. They talked about a good H1 to the end of September, but they look at a more difficult second half because they've seen some projects being delayed in terms of the pipeline. And they also took a £20 million provision for technical problems around one particular bridge they've constructed. And I think the shares responded pretty poorly to that combination of news. And it's, I guess, just a salutary reminder of the difficulties that some of these specialist engineering projects can encounter. So it's not an easy market at the best of times. They navigate it normally pretty well, but they've had some bad news and some bad luck on that at the moment. So hopefully we can see them work that through. But yeah, they're going through a bit of a tough patch at the moment for Severfield. Then we had STV Group, the Scottish broadcaster, streaming provider, and increasingly content producer. They gave us a trading update, which suggested that 2024 was pretty much on track. It'll be interesting to watch STV with the developments going on at ITV.
Yeah, I was going to ask you about that because it looks like ITV might be in the spotlight for some form of private equity involvement.
Yeah, and if there's restructuring or changing of the shape of what ITV does or the way it operates, that there might well be opportunities for STV. They've got a new CEO, so there's a lot of potential for excitement and opportunities for STV to take advantage of that moving forward. So yeah, we'll keep an eye on both of those over the coming weeks and months. And then finally, IG Design reported that they'd seen actually a relatively difficult H1, but things were looking a bit better for H2. And so they're delivering on what's been a multi-year sort of recovery plan. Seems to be going pretty well. The one thing to bear in mind is that they're a very high volume business. So they do an awful lot of import-export around the greetings, cards and stationery market. There's always risk within that business to do with trade dislocation or difficulties with import-export. And the obvious thing you want to keep an eye on would be to do with tariffs. And if there are challenges that they see because of that, then they might manifest themselves quite quickly. So there's high volumes, relatively low margins, and the transport costs are a pretty big part of their business. And so it's a tricky market they operate in. I think they do it very well, but there's a bit of risk there, I'd say. So wait and see what IG are up to. But certainly the long-term transformation is well underway. So those were the bits of UK news. And what about next week? Anything major in the diary?
We have some manufacturing PMI from China on Monday. That's been sort of hovering around 50 for the last couple of years, really. And we've got manufacturing PMI on the same day from the US. That's been showing a weaker trend.
Those have been run post the US election, presumably, so they'll be quite up to date.
Yes, that's true. More importantly, later in the week, we're getting services PMI from the US, and that has been running in the mid-50s, basically, and people expect that to be unchanged. But yeah, I think that will be a bigger barometer of any sort of post-election nerves, or in the case of the US, probably excitement, I don't know. But it's jobs week next week, so we've got the crapshoot we get of the non-farm payrolls on Friday. Just bear in mind that last month we saw this sharp decline from 194,000 to 12,000. So where is that going to take us? Was that a one-off, or are we seeing a sign of increasing weakness in the US employment market? So we also get the unemployment figure, which people expect to be broadly unchanged at 4.1%. So those are the main things for next week.
That's great. So the jobs number is probably the big one to look for. So yeah, good stuff. Great. Okay, well, good to catch up, and we'll chat this time next week.
Okay, look forward to it.
Talk to you then.
Brought to you by Progressive Equity.